As a trader, when you open your Forex chart, be it whatever time frame it is, you should be able to tell what the market environment is. Are you in a downtrend? Are you in an uptrend? Or is the market ranging? Because you should have a strategy to either buy or sell in whatever environment you find yourself. And if you don't have any strategy, the best thing is to stay out of the market. So, like what we are looking at here, this is British pound US dollar on the daily time frame. If you look at this carefully, you can see that the market is forming a higher high, higher lows, higher high, higher lows, higher high, higher lows. How do you determine the higher high? Is strictly by watching the resistance here. Once the resistance is formed and price corrects downward and forms a support, it moves higher by breaking this level. It moves higher and form another higher high. So that's what we call here higher high, and here is a higher high to this area, and here is also a higher high. So here is a higher high, another higher high, higher high, and another higher high here. So price in an uptrend, price forms from higher low, it moves to a higher high, it forms another higher low, it moves on to form another higher high. So as price keeps moving this way, this is how you tell that you are in an uptrend. You can see that this point 1 here got broken by point 3, and point 2 was never taken out by point 4. Even point 0 here was never taken out by point 1. Same thing with point 4, never taken out point 2. So, but the resistance must always take out the previous resistance. This resistance was taken out by this resistance, this one got taken out by this, and this got taken out by this. So when we are in this kind of environment, what do we do? Immediately you notice price exhaustion. The best thing for you to do once price is exhausted, this is a bullish candle here, it's not showing exhaustion, but this has already happened. So I just want to use it as an example. But once something like this occurs, what you do is to look for a sell opportunity. So you just basically sell this. So you sell at this point and place your stop loss above this point. Once you sell, you and your stop loss is properly placed, then you wait for the market to either go in your direction or take you out. So you can see this after selling, you can see how the price is going. Mind you, this has already happened. I'm just trying to show you an example of it. So you can see the point at which we sell. You can see after this bullish candle, there was a bearish close, another bullish candle, this bearish close. So these are signs of exhaustion in the market. So selling in this kind of area is a good sign after you've noticed that price has been overbought. So you sell at the peak, and that gives you a good risk to reward ratio. So let's look at a downtrend. So if you look at this market environment, you can see that this is clearly a downtrend. And you can tell that by this lower high and this lower low, lower high, lower low, lower high, lower low that are being formed. So you can see price formed a lower high, it moves down, forms a lower low, it moves up, lower high, down, lower low, and so on and so forth. So you can see, so this is a clear example of a downtrend. And when you are in such a downtrend, let's say you are at this point, you look for opportunity to sell and write down this move here, or you wait for sign of exhaustion to buy. Either you buy at this point so that your target can be around here, or you buy right here so that your target can be around here, or you buy as it is now because it moves like a sinusoidal wave. So at the point where it is now, let's say we buy because we notice an exhaustion around. We buy because we notice an exhaustion between this area. Hopefully price should move up for us to make a good profit. So you can see if your entry is right and you buy at this point with your stop loss around beneath the support level, then price should move in your direction. And if it doesn't move in your direction, then your stop loss should be hit and you'll be taken out of the market so that you don't make excessive loss. So you can see how nicely the market is moving, price is moving. You can see at this point now, 0.4 is almost taken out. So you can see, so if you have this perfect entry and you have the patience to ride all the way to this place, it would have been a good trade. So this is how an uptrend works. This is how you buy in a downtrend. So we have discussed about a downtrend. We have also talked about an uptrend. Another aspect of market environment that I need to talk about is a raging market. You can see after this bullish move, after there was an exhaustion, you can see this bearish move all the way to this place. When price got here, it retraces up to this point, and you can see there is no clear definition of where price is going to go. So price formed resistance here. You can see it tested it here, here, and here. At the bottom, it also formed a support. You can see it tested it here, and it also tested it here. So this is one of the easiest places to lose your money trading in the raging market. You know, it's much more easier to make money when you are trading in a trending market. So as it is, as price keeps moving, as it keeps bouncing in between support and resistance, you can't actually tell if price is going to head downward to this place, or if price is still going to form another support here and head up this way. So you can't really tell. As it is, price can go in any direction. So this is a ranging market because price is ranging between this resistance here and this support here. So there is no clear definition of where price will head next. So before you can trade in a ranging market, you have to have the experience. So let's quickly talk about trend reversal and retracement. As you can see, this is an uptrend, and you can see from this point price rallied to this point, it retraces back to this point before it rallied up again and retraces back to this point. It rallied up to this point, and you can see this retracement. So clearly from this point you can see that retracement is just a short-term move against the established trend. So this is an uptrend. So retracement is a short-term movement against established trend. You occurred here, here, and here is occurring. Why reversal can occur at any point? This retracement can easily become a reversal. The one here can easily become a reversal, while the one here can also easily become a reversal. Reversal is not a short-term move against the established trend line. It's an overall movement. It's a complete change in direction, as you can see. So let me show you more example of that. You can see this movement now. Here you can see that the trend line head, but at this point now the trend line is broken. So instead of this stopping and moving up this way, which would have made it to be a retracement, you broke this trend line and it keeps on moving downward. So this is a trend reversal. As you can see, is a total change in direction. So same at this point now, you can see a support has been established. A support has been established, and you can see now another reversal is occurring. You can see this is another complete change in direction. You can see this is the retracement after price sold up to this point. Now it's changing direction. This is a complete change in direction. So this is another retracement that just occurred. So this another one is occurring now. So what we call this a retracement or a reversal. So we'll keep watching. So this is okay. So this is a retracement, as you can see, as it's going now. So we'll keep watching. So at this point, we can say this is still a retracement, but as it is now, price is ranging. Price is ranging. There is no clear direction, and wow, you can see this is another reversal. This is another reversal.